In this video, we are going to talk about dividend stocks from the UK. So before starting this video, please like this video and subscribe to this channel for our future updates. Number 1. M&G. We used consensus analysts' estimates when putting together this top dividend stocks UK guide, and M&G came out on top. M&G initially stood for Municipal and General Securities Company Limited. It launched the first ever UK unit trust in 1931. And it remains an international pioneer in savings and investments to this day, with more than 5 million customers. M&G is a fairly recent addition to the FTSE 100. It registered on the London Stock Exchange in 2019, following a demerger from its parent firm, Prudential. It started paying dividends in 2020, and soon soared to the very top of the high-yielding list. Analysts expect a 10% dividend yield this year, with 2.09x dividend cover and a payout ratio of 48%. The firm allows private investors to buy into funds through ISAs, pension plans, OEICs or unit trusts. It also provides financial services for professional investors, institutional investors and charities, and offers several other services. In 2020, it tied up a deal to buy digital wealth management platform Ascentric from Royal London, which was planned to move £14 billion in assets under management. M&G paid a dividend of 11.92p per share in May 2020, and then 6p per share in September. That amounted to a total of 17.92p of dividends, with a share price of 185p at the time, giving it a dividend yield of 9.68%. Analysts expect it to be marginally higher in future. M&G shares can be purchased with the best broker accounts for beginners. With a dividend yield of 9.3%, this British multinational tobacco and logistics firm came in second in the consensus analysts' forecasts. The dividend cover is forecast to be 1.85x, with a payout ratio of 54%. Imperial Brands, formerly Imperial Tobacco, owns Davidoff, West, Gauloises Blondes, Monte Cristo, Golden Virginia, Drum, and Rizla, among other brands. With a turnover of £32.6 billion in 2020, the company employs 27,500 people and operates in 120 countries. After Philip Morris International, British American Tobacco, and Japan Tobacco, it is the world's fourth largest tobacco company. The company produces over 320 billion cigarettes per year, although it is gradually shifting to vapor products, such as its Blue brand, as well as heated tobacco and nicotine products. Imperial Tobacco is headquartered in Bristol, England. It paid an 11% dividend yield in 2019 and 9.84% in 2020. This year, analysts predict a dividend yield of 9.3%, making it one of the highest dividend-paying stocks in the UK. Number 3. Polymetal. The London Stock Exchange lists this Anglo-Russian precious metals mining operation, which is based in St. Helier, Jersey. It has a high-quality portfolio of gold, silver, and copper mines, making it a compelling investment right now. Copper prices have risen sharply in recent months, as it is needed for electricity generation, transmission infrastructure, energy storage, and consumption. It will be critical in the transition to green energy, but inventories are poor, so the outlook is upbeat. At a time when central banks are printing money at an unprecedented rate, gold is commonly regarded as an inflation hedge. Silver is an inflation hedge, but it also serves a practical function. Owing to the continued growth of industrial activity and the need for safe havens, investors are increasingly interested in mining companies. Polymetal employs about 2,000 people and operates in Russia. It operates mines and conducts exploration in 6 Russian areas, as well as Kazakhstan and Armenia. Polymetal is known for paying out generous dividends, and analysts expect a dividend yield of 8.4% this year. Number 4. British American Tobacco. BAT is another tobacco behemoth, with brands such as Dunhill, Kent, Lucky Strike, Pall Mall, and Rothmans among its portfolio. It is the world's second largest tobacco company, but it is not far behind industry leader Philip Morris. For 2020, the company announced sales of £25.8 billion and a profit of £6.6 billion. It employs 55,000 people and operates in about 180 countries. It was founded in the year 1902. Jack Bowles took over as CEO in March 2011 after Nicandro Durante stepped down. BAT has long been regarded as one of the best dividend payers in the United Kingdom. With a payout ratio of 65% and 1.53x dividend cover, it is expected to yield 8.4% in dividends. Number 5. Rio Tinto. This mining behemoth made headlines in February 2021 when it announced the largest dividend payment in its 148-year history. Rio Tinto said it would pay a $5 billion final dividend and a $1.5 billion special dividend in 2020, taking the overall payout to $9 billion, £6.5 billion. The world's largest iron ore producer had just posted its highest annual earnings since 2011, and had just paid out a record dividend to its shareholders. It came after iron ore hit a 9-year high due to strong Chinese demand. Rio Tinto's consensus future dividend yield was 7.7%, with 1.11 times dividend cover and a 90% payout ratio, according to analysts. Rio Tinto has recently cleaned up its balance sheet and its debts, and it expects to benefit from increasing commodity prices in the future. This Anglo-Australian conglomerate, which produces copper, gold, uranium, and diamonds in addition to iron ore, is the world's second largest metals and mining company. With offices in London and Melbourne and about 45,000 employees worldwide, it is dual-listed on the London Stock Exchange and the Australian Stock Exchange. Number 6. Persimmon. This British construction business is named after a horse that won the Derby and the St. Leger in 1896 for the Prince of Wales. It has come a long way since Duncan Davidson created it in York in the 1970s, and it is now a FTSE 100 index constituent. Persimmon has bought Ideal Homes, Beazer Homes UK, Westbury, and other competitors over the years. It is now a big player in the UK housing industry and is known for paying out generous dividends, making it one of the best dividend stocks for passive income. This year's consensus dividend yield is 7.4%. With a 1.16x dividend cover and an 86% payout ratio, this stock is a good buy. The company has a healthy cash flow and operates in a market that can rely on government funding, so it will be able to keep paying attractive dividends in the future. Number 7. Legal & General. Without Legal & General, no list of the best dividend stocks will be complete. More than 10 million clients around the world depend on this financial services provider for insurance, annuities, shares, and lifetime mortgages. After BlackRock, Legal & General is Europe's second-largest institutional investment management company. It began in a coffee shop on Chancery Lane in London in June 1836. Its headquarters are still in the city, but it also has offices in the United States, the Middle East, Europe, and Asia. In 2019, the company produced more than £66 billion in revenue. It has a 7/1% projected dividend yield, 2.28 times dividend cover, and a payout ratio of 64%. Legal & General has been consistently paying dividends to its shareholders for several years, so it's easy to see why it's consistently ranked as one of the best dividend stocks to buy right now. Number 8. Phoenix Group. Phoenix Group is often included in lists of the best dividend stocks in the United Kingdom. It is one of the country's largest life insurance companies, with experience in life insurance and pension fund acquisition and management. The Pearl Loan Company was established in 1857. Over the last few years, it has acquired companies such as Standard Life Assurance and Reassure Group. The best dividend stocks consistently offer high yields, and Phoenix Group is no exception. It has been gradually rising its dividends since 2010, with a 6.9% increase expected this year. Number 9. Aviva. This blue-chip insurance company is one of the best dividend payers in the United Kingdom. With about 33 million customers spread across 16 countries, it is a global powerhouse. Aviva is the largest insurer in the United Kingdom and the second largest in Canada, with a heavy emphasis on emerging markets in Europe and Asia. However, it has been selling off parts of the company in order to concentrate more on the United Kingdom, Ireland, and Canada. Amanda Blanc became CEO in 2020, and the company has made significant strides during her tenure. Debts have been reduced, subsidiaries have been sold, and shareholders are anticipating a special dividend following the COVID-19 pandemic's payout cuts. This streamlined firm has a consensus dividend yield of 6.8%. It may have slashed dividends in the past, but shareholders are now optimistic, making it one of the best dividend stocks for UK investors to consider. Number 10. BP. In recent months, BP has benefited from a rise in oil prices. After the pandemic lowered demand for oil, it cut dividends in 2020, but the price began to rise after the global economy reopened. After the 2010 Deepwater Horizon oil spill in the Gulf of Mexico, the company has been working to repair its tarnished image. Along with its core oil and gas exploration, development, refining, and distribution market, it now has renewable energy investments in biofuels, wind power, smart grid, and solar technology. BP has set a target of achieving net zero greenhouse gas emissions by 2050. BP is a multinational corporation headquartered in London that employs over 70,000 people. With a 6.6% analyst consensus estimate, 1.1 times dividend cover, and a 91% payout ratio, the company is set to resume dividend payouts, reclaiming its position as one of the best dividend stocks in the UK. What do you think about our video? Do you want to add more to our list? Let us know in the comments below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button and turn on notifications before you go. Thanks for watching.